Have you ever thought about the best way to save and grow your money? Dreamed of passive income and financial independence? Then this video is for you. Hello everyone, you're watching Mindful Momentum channel, and today we're starting a series of videos where we'll talk all about investments. Today you can expect what investments are and why it's worth starting to invest right now, how to organize your finances, define financial goals, and finally start earning in the stock market. Let's get started. Investments, it's when you put your money into various assets with the aim of making a profit in the future. It could be buying company stocks, bonds, real estate, or other financial instruments. Your investments can yield profit in the form of dividends or asset value growth. The main idea is to make your money work for you instead of just lying in a bank account, because even if you put your savings into a deposit, you'll lose money due to inflation. Typically, the annual inflation rate exceeds any deposit interest rate in a bank. That's why it's worth keeping your money in securities. However, it's important to understand the risks and do research before investing in any investment. So let's hurry up and buy stocks, you might say, but I suggest not to rush and instead delve deeper into this matter to avoid unpleasant mistakes in the future. First of all, before starting your investment journey, it's worth organizing your finances. To do this, start by creating your budget, as it's important to understand how much money you have on hand and how you use it. Create a table where you'll determine your incomes and expenses. This will help you manage your finances and find money for investing. Here's how your monthly budget allocation might look depending on your incomes. Additionally, an important step is to create a financial cushion, because you never know what might happen tomorrow. Maybe you'll urgently need money, and to avoid hastily selling all your stocks, possibly at a lower price than when you bought them, it makes sense to create an untouched reserve for emergencies. Ideally, this should be an amount that can cover your needs for a period of 3 to 6 months. This will provide you with financial stability in case of unforeseen circumstances. I think if you're watching this video, there's no need to explain the importance of paying off all your debts and loans before starting to invest. The next important step, without which we can't do, is setting a financial goal, based on which we can see a clear path to its achievement. And the first question you need to answer is why you're collecting money in the first place, and vague excuses like lots of money, passive income, or a new car won't work. Here a specific example is needed, like buying an apartment for $500,000. The next step is to determine the time frame for achieving our goal, because it will determine which tools we should use to achieve it. Terms can be short-term up to 1 year, medium-term from 1 year to 3, and long-term from 5 years. For example, buying our apartment in 5 years. We have a long-term goal. Now we need to figure out the tools to achieve it based on the terms. For short-term goals, reliable and low-risk bonds are best. For medium-term goals, bonds and index funds are better to use. And for long-term goals, you can try investing in stocks of specific companies. The essence lies in understanding the fact that a company that works well and develops over time will bear fruit in any case, and we won't be afraid when our portfolio occasionally declines. In conclusion, I suggest doing a little calculation, because in our business, precision is never superfluous. I'll leave a link to an investment calculator in the description. Here, by filling in the data we know, we can determine with which investments and at what growth rate we can achieve our goal in the specified period. Now, having gained some information and done the calculations, we can determine how ambitious our goal is, and if necessary, adjust the terms or investments. Thanks to these calculations, you'll take off your rose-colored glasses and be able to clearly understand which direction you should move in next. The main thing in this matter is to be realistic, because it would be strange to expect that by investing $100 monthly, you'll be able to buy a luxury car by the end of the year. In our next videos, we'll tell you how to reduce risks and about diversification, as well as the power of compound interest and whether it's possible to become a millionaire in just 5 years. Subscribe to our channel not to miss anything interesting. I wish you success, and may your finances always be in order.